Welcome to the Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart for January 8th, 2017. Market breadth. With this past week's market advance, our Bull-Bear Point and Figure ratio at 2.01 rose from 1.58 last week, advancing into strongly bullish territory. The total count of securities in bullish or bearish patterns increased 1% to 3,242. The count of bearish stocks decreased 14%, while the count of stocks in bullish patterns increased 10%. The Sand to Pearls P&F Market Breadth Summary Chart shows us a market now 8 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Sand to Pearls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 6 points for the 8th advance in 9 weeks, at a positive 356.57 points. It continues above the November 2014 and March 2015 tops, continues below the December 2016, May 2016, March 2015, and November 2014 tops above plus 100, as well as continuing above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on lower average daily volume. Momentum. At Tuesday 1-3 close, the CCI 20 daily formed a zero-line reject long entry signal within the plus or minus 50 range, at a positive 186.83, up from a negative 30.87 last week. The CCI 20 will signal the end of this trade simulation when it falls below positive 100. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 36 weeks ago, while the daily CCI 20 began a Woody's uptrend 7 weeks ago. The CCI 20 weekly has risen to a positive 156.70 from a positive 127.62 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: gold and silver REITs and oil services on top, oil and some tech on the bottom. Bullish REITs continues in the top 5. Brokers has left the bottom 5 and entered the top 5. S&P Retail has left the bottom 5. Bearish Disk Drives has entered the bottom 5. Semis has left the top 5 and entered the bottom 5. Gold and silver continues to lead the top 5. Focus this week from www.zerohedge.com. City, there is something strange going on. Something doesn't smell right, by Tyler Durden. Leaving off the introduction, the remainder of the short article and charts follow below. As Citi's Matt King then notes, earnings bullishness gets you only so far, and as the chart below shows, the recent surge in global stock prices is not a function of earnings, but expanding PE multiplies relative to treasuries, which then prompts him to ask why, now that yields are surging, shouldn't we be discounting using higher bond yields? This in turn prompts King to propose one of his trademark rhetorical questions. There is something strange going on, adding that something doesn't smell right in a world in which uncertainty is soaring, yet spreads are collapsing, as SocGen first pointed out last month in its, quote, most frightening credit chart, end quote, even as leverage also keeps rising. What is the key ingredient in the mix that makes sense out of this market chaos? Simple. According to King, central bank buying of anything that is not nailed down is the missing link. Furthermore, despite all talk of a shift from monetary to fiscal stimulus, central banks aren't done yet, not by a long shot, which in turn has, so far, allowed markets to ignore the reality that the credit bubble is getting bigger by the day, as debt and interest coverage continue to rise, while EBITDA still shrinks, resulting in late cycle fundamentals and valuations. And yet, there is always a tipping point. According to King, such a point would arrive once real yields spike higher, not matched by a pickup in growth. His final rhetorical question: how long until this tipping point happens? The answer: 50 basis points. Now, if only a 50 basis point spike in real yields would also put an end to all the other strange things taking place in a world which is burning every day, yet where the Dow Jones is partying like it's 19,999. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you're not being washed away by the atmospheric river, and that you're looking forward to a prosperous and productive week coming up. Wishing you, as always, true success.